In today's video, we will explore 3 stocks that are currently priced at less than $10 but have significant growth potential, which is beneficial for investors. Let's delve into these stocks and explore their growth potential. First on the list is Tingo Group, symbol TIO. It is a Nigerian mobile financial services company with tremendous potential for investors. With a current stock price of $2.50 and a market capitalization of $376 million, Tingo is well positioned for growth in the coming months and years. The company's total debt is reported to be $2.96 million, while its cash balance is $500 million, providing a strong financial foundation for future expansion. The estimated EPS for the year 2023 is 1.76, with a projected price-to-earnings ratio of 1.31, reflecting an impressive YoY growth rate of 164%. Moving into FY 2024, the estimated EPS is expected to rise to 3.77, with a projected P/E ratio of 0.61, with a YoY growth rate of 92%. These estimates suggest that the company is on a growth trajectory, with strong potential to attract investor interest as both sales and earnings are projected to increase significantly. The estimated revenue for 2023 is $3.05 billion. The company's estimated revenue for 2024 is also impressive, $5.85 billion, indicating strong growth prospects. Tingo has a customer base of 9.3 million and a net income of $642 million on a revenue of $1.2 billion in FY 2022. The company's partnership with All Farmers Association of Nigeria and Visa to add 20 million new subscribers to Tingo's platform, which includes Mwasa Agri Fintech and secured payment services, is expected to drive significant revenue growth in the coming years. Another good news for investors is Tingo is now a Nasdaq-traded company, which will help garner added interest from investors as Nasdaq Stock Exchange is a major global marketplace for buying and selling securities. CEO Darren Mercer was intrigued by Tingo Mobile's partnership with Visa and conducted extensive due diligence on the company, spending over $7.5 million. The board approved an on-the-ground investigation in Nigeria, involving top-caliber firms such as Ernst & Young, Houlihan Lokey, Dentons, and Elinoff Grossman & Skoll. Deloitte is company's financial auditor starting March 2023. Darren argued that Tingo Mobile chose to list on the OTC market too soon and was ill-advised in doing so. Due to the shutdown of the SPAC market and poor equity market conditions, they were able to acquire Tingo Mobile at a reasonable valuation, with Tingo Mobile stakeholders owning 75% of the equity post-conversion. Tingo is a risky investment because it is based in Nigeria, an emerging market with operational, financial, and political risks. The company's success in developing its export model to convert the Naira into a reserve currency and onboarding new countries such as Malawi and Ghana will be crucial for the investment to work. Tingo Mobile also needs to execute its business well to overcome potential operational issues, and there is the risk of negative publicity affecting its reputation. We believe Tingo is a great investment at current rates. The stock price has already shot up considerably. However, there is much more upside potential left, with price can touch as high as $10 in the coming years, which implies a potential return of as much as 4 times. Our next penny stock is Equitrans Midstream Corporation, symbol ETRN. It is a company building the Mountain Valley Pipeline, a natural gas pipeline that will transport natural gas from Appalachia to the southeast of the United States. Despite facing multiple delays and cost overruns due to legal and regulatory hurdles, as well as opposition from environmental groups, we believe that Equitrans offers an opportunity for investors, as demand for low-cost energy in the U.S. is high. The Lower Energy Costs Act was introduced to fast-track the MVP project, which is awaiting permits from USFWS, the Army Corps of Engineers, and the Forest Service. The pipeline's completion could result in a significant increase in earnings and a decrease in debt for the company. Additionally, geopolitical events and millions of Americans moving to the southeast make the project even more valuable. The pipeline may even end up exporting natural gas to Europe. As of April 2023, Equitrans is trading at attractive valuation, with a market capitalization of over $2.24 billion. Its current stock price is $5.09. The company has consistently generated positive cash flows from operations and has a solid balance sheet with manageable levels of debt. Equitrans management team is committed to maintaining a disciplined capital allocation strategy and has a track record of returning value to shareholders through dividend payments and share repurchases. Equitrans is generating a revenue of over $1 billion for the past 3 years. The expected revenue for the company is $1.4 billion in 2023. However, Equitrans has a total debt of $7 billion and cash reserves of just $68 million. Equitrans carries significant debt on its balance sheet, which increases the company's financial risk. Also, competition from other companies in the industry could impact its financial performance and growth prospects. However, the company has received Federal Energy Regulatory Commission approval for another project, and some management members have also bought shares. The stock is a good investment opportunity for those who believe in American infrastructure and are patient enough to wait for the outcome of MVP. We believe this stock can also give a potential 4 times return from current levels with a target price of $20. Our third stock on the list is Casa Systems, symbol CASA. The company recently reported its Q4 results, beating analyst expectations and posting slightly positive EBITDA and net income results after heavy losses in the first 3 quarters of 2022. Revenue declined 20% compared to Q4 2021. However, considering that the revenue declined 32% for the first 9 months of the year, this is actually a welcome turnaround. However, the stock collapsed 63% from $3.49 to $1.29 in the 3 trading days following the earnings report. The current stock price of Casa is $1.24, and its market capitalization is $120.90 million. Many investors believe that the sell-off of Casa Systems stock is overdone and see an opportunity to buy shares at a low price. Although the company has engaged JP Morgan to refinance the $226 million in long-term debt that is due in December 2023, the new interest rate will likely be much higher, which could lead to a net loss. The revenue guidance of $300 to $325 million for 2023 is also lower than analyst expectations of $355 million due to the loss of a large North American cable customer. However, the company has recently been awarded a contract with a major European cable operator and has a backlog of $286 million in work to be done in 2023 and beyond, including a $140 million deal with Verizon. Despite the challenges, we believe that the stock price drop is unwarranted. Applying a 1x multiple to 2023's revenue guidance, a fair short-term target for the stock price comes in at $3. Moreover, the company's relationship with Verizon, which bought a 9.9% stake in Casa and signed a multi-year $140 million contract with the company, provides a fail-safe for investors in case the company and the stock price continue to struggle. This should also put a floor on the stock price, as Verizon has a vested interest in Casa's success due to its role in developing Verizon's 5G and mobile edge computing ecosystems. In conclusion, although Casa Systems has experienced a significant decline in value, the market's reluctance to give it a higher valuation is unfounded. Despite the challenges, we believe that the stock price drop is overdone and that the company has a lot of potential to grow in the future. If the company can solve its debt issue and the Q1 report shows further improvement, the stock price is likely to recover soon. It can give as much as 3 times return to investors who are willing to take risk and wait for recovery. Thanks for watching.